Hi, everybody. This is Trading Bitcoin. Correct. If you see the thumbnail, we are, of course, going to look at Bitcoin, but also traditional markets, which is going insane. Powell is tonight going to be announcing the markets. There has been blood in the markets, a little bit of an uptick last night. I'm just going to say WTI. I'm going to force the gentlemen, these are the gentlemen, Tone and Tyler, to talk about it a little bit. So I will stop giving away spoilers. First of all, hey, Ty, like having my partner on and forcing it on Tone.
Yeah, this is great. I haven't been on with Tone for a while. He's been traveling a lot. We've got a lot to talk about, mainly with these traditional markets. I think today is a big day. I don't know what's going to happen, but it's going to be either good or bad. I don't think it's going to be neutral. And so we'll talk about that and look at some things. Oil's doing crazy things. Federal Express is doing crazy things. Tiffany's doing crazy things. Bitcoin has finally got some legs under it, bouncing off the 3,000 area. So this will be fun. Lots to talk about.
Tone, new do, looking as Jimmy said, alpha. You feeling alpha for this today?
Yeah, I'm definitely gonna, I'll definitely take care of that part. Yeah, no, I like it. No, this is great. I'll probably shave the whole thing in a couple of weeks before I go away. I really like it, actually.
Love it. Love it. All right, let's dig in. Finally, people are happy about Bitcoin today.
All right. Yeah, let's just go ahead and start. I'm not going to spend too much time. We have about an hour, and then we'll have to go. So, all right. The conference, the workshops, me, Jimmy, Tyler, a few other people are interested in doing workshops. It's just, so much going on. It's hard. It'll be a pretty small conference. We still have plenty of tickets up for sale. The current price, 0.15. The price in Bitcoin never changes, but I am expecting Bitcoin to go to 5,000, which is what we're going to talk about. So the fiat price of 750 is pretty much dead on if you guys want to wait a little bit. Other than that, my workshops, that's pretty much it. Just Phoenix on schedule, and that's about it. Okay, Bitcoin. Hey, Tyler, did you get a chance to look at the capitalization charts to do any TA off of those?
No, I really haven't. And I've seen that you've pulled a number of these up, which I think are very interesting. So I'd like to hear what you say about them. I've been watching.
Oh, no, I haven't had time to look at them yet, so we're both skipping it for now.
Okay, good. Yeah, I've been watching the total market cap very closely as it bounced off of 100 billion. It's very interesting that Bitcoin hasn't really gained or lost very much on the total market cap throughout this period, so as a total percentage. So we might talk about that later.
All right. So here's the monthly chart. The monthly chart. I'm a little confused on a monthly chart at the moment. I always thought that last month was supposed to be the month similar to October 1st, and then we bounce, potentially back to like 6,000. So I never expected Bitcoin to really fall far below 4,800. I expected the triple support cluster of Fibonacci, 30-month moving average, and the trend line. I expected that cluster to hold the price of Bitcoin and bounces from 4,800 back up to like 6,500 or so, and then begin the drop down to 3,000, bounce back, and then begin the drop down to below 3,000. But we kind of got turned around in between here. I guess we can say that Bitcoin has come down to 3,000. It's fractionally close enough to it for me to be okay with that. We came just shy of the 50-month moving average. So we didn't capitulate hard enough to mimic the January month of back of 2015, but we capitulated way more than we did back in, September, back in October, like late September, early October of 2014. So we're stuck somewhere in between, and I don't like this in between. And I still think that we are going to go lower. Your thoughts on the big macro picture, Tyler?
Hey, Tone.
Yeah.
Everything looks good, but just an FYI on the top left, it says Brave New Coin Liquidity Index for Bitcoin. Just so
Yeah, that's fine. That's what I'm using.
Okay, go Ty.
Yeah, I don't like this chart at all. I don't think this bounce is going to get back to 5,000. I doubt if it's going to be able to get over 4,200 or 4,300. And to me, this macro, the monthly chart, looks very, very bad. It would not surprise me that we run out of gas very quickly on this bounce from the $3,100 area. And so right now, I still believe we're going to break through the 3,200 to 2,800. We've been working on it, chipping away a little at a time from 3,250 down to 32, then 32 down to 3,150. I think the low was 3,122 on Bitstamp. So to me, it looks like termites eating through the floor. And as soon as we get down below 3,000, I don't think that 2,800 is going to last. So I am not looking to go long on this bounce or tell anyone else to go long. If anybody's still in, my recommendation is you want to be selling into this bounce. Kind of the opposite of what you would do if you were dollar cost averaging going down. You want a Bitcoin cost average going up. This is a good chance if you missed the initial drop down to 3,200 to pick up another $500-600 more than you would have had. But that's the most I'm looking at.
Yeah, I'm a little more bullish than you, Tyler. I think we could go all the way as high as 5,000, maybe even higher. I can certainly see us going into this depth cross. The monthly depth cross is anticipated to be at 5,000 in 2 months' time. I can certainly see Bitcoin going into that depth cross and into this downward sloping trend line. Like that is a quadruple resistance cluster, and I can certainly see Bitcoin going into it.
Yeah, I could too, other than the fact that that giant candle we had last month was the one that was breaking below my phase 2 line and that 6,000 horizontal. And it was so sharp and so big, and the response here in December is so muted. After that big of a drop, it almost looks to me as if it's beginning to pull away in a bearish fashion from the 2015 comparison that you've been making. And it's more bearish than at that period. So you might be right. We might be able to get back to that 5,000 area on a monthly basis. But right now, to me, I would be very surprised to see it get back over 4,200 and then turn around to the downside once again.
Yeah, that's my bet. I mean, I am long GBTC right now. We're going to talk about GBTC for a little bit. I was really, really pissed last night, and I'll tell you guys why. Really, really frustrated with myself mostly. I mean, not the markets. I never get frustrated with the markets. You should never get mad at the market. You should only get mad at yourself for the decisions that you make with those markets, but especially when they're being telegraphed. So here's the weekly chart, and like as much as I want to believe in sequential that it's going to take us down to a 9, it would be very, very difficult, because in order to get a 9, we have to turn around and go down very quickly. The only way we're getting a 9 is if we have a brand new weekly low close. This is why you don't want your 5th candle to be, at the end of a big capitulation down drop. So this is one of those situations where I'm liking this aggressive 13 buying opportunity right off of the 200-week moving average. I'm okay with this. I am more bullish than Tyler. I do think we're going to go above 4,200 here. I think there's, the bulls are going to come back. You know what's going to tell me if Bitcoin is ready? I think I've already decided when I'm going to call this bear market. When I see Bitcoin go up like this, but shitcoins don't. Like, if I look at Ethereum right now and Ethereum is up similar to Bitcoin, then Bitcoin is going lower. The day we get a couple of days like we just had, but during those days, the altcoins go down even more, not up at all, is the day I'm going to call the end of the Bitcoin bear market. As long as things like Ethereum and EOS and Cardano, as long as the shitcoins are with us, anticipate a very long bear market for the entire crypto space. Crypto space isn't coming back this time. I think only Bitcoin is.
Yeah, that is a very important point. And I might be completely wrong on this, but I don't believe that Bitcoin can get to the bottom until there are something like no more than 100 and hopefully no more than 50 altcoins and ICOs. And we are so far away from that I agree with Tone. I've been telling people that keep saying you're nuts, this can't go to 1,000, it's impossible because of mining costs and all of the rest of it. And my response is a fundamental one, not a technical one. My fundamental belief is that the reason we stopped at 20,000 on the upside, there were too many altcoins hanging on from the public's side of things and the regulator's side of things, and Bitcoin simply couldn't keep going higher with 3,000 altcoins hanging to its coattails. So that ended the Bitcoin hyperwave. And ever since then, we've been dropping for a year now from that peak, and we've gone from 3,000 to about 2,000. We need to drop from 2,000 down less than 500, less than 100. And once we do, I believe we're going to be down at 1,000 or lower, and there will be no more altcoins or very, very, very few. And then that will be the bottom for Bitcoin.
Yeah, looks like we're on the same page there. Just going to quickly glance at the weekly RSI went into oversold territory officially.
Yep.
Again, I can see a bounce back to 5,000. I can see a bounce back to the top of the triangle in the RSI. And then I think we're going to make a much bigger and much deeper low.
Yep, I think we're on the same page other than how high we can go. I hope you're right from the perspective that there's a lot of people that still are hanging on to their coins, not only Bitcoin, but all kinds of other coins. So I hope for their sake that this bounce can get above 4,200.
I just needed to go up as high as it could into early February, because that's when the Unconfiscatable conference would end.
Yeah.
And ticket sales are in Bitcoin. I would love to unload all that after the conference. That's
a great idea. I'll change my mind. I'll say 5,000 now.
Thank you. No, we gotta be good here. So the CMF weekly is the worst it's been since 2015. That's not a good sign at all. And the OBV isn't really doing much right now. Okay, let's move on. The daily chart. The daily chart looked really, really bearish to me 3 or 4 days ago, and hence I drew these arrows. Well, I kind of got the time right of when the rebound is going to happen. I actually moved the arrow to the right a little bit on my last video. I got the time right of when we were going to rebound, but I got the price a little bit wrong. I thought we would go, but like when we broke this red line here at 3,300, it all looked like it was ready to go down to 2,800 before. I've been anticipating this rebound. The question was when. I've been anticipating this rebound since 4,200. Like at 4,200, I felt we could rebound. Then we dropped. I finally picked up GBTC. I picked up some GBTC around that time after we dropped that second time. And I sold some at a profit, and I still have the rest. But I plan to sell that at a profit in a couple of weeks to a month. So the sequential is probably like on a green 4 or something, or a green 3. Not really sure, but it should be fine. Yeah, so at this point, we broke my green line. We have to close here. That is not a good wick. We still have about half a day to go. We need to close above this green line. And how come we only have 88 people watching? That doesn't seem right. Hold on. Did people not get notified that I'm live? You find that strange?
Yeah, very strange.
That's
That happened to you before, and it turned out that you had made it private, but I don't remember a couple of days ago.
Yeah, what's going on? That's weird. I usually get 800, not 80. This is weird. Huh. That's really strange. I don't know what happened. The video shouldn't be private or unlisted.
Yeah, that's it. It was unlisted. That's what happened before. I don't know about now.
Yeah, no, it shouldn't be unlisted now. Hey, Leah, any thoughts on this?
They don't like my purple shirt.
What's going on? I mean, it seems like the 84 people that are watching are the ones that don't shut up in the live chat out of the 800.
Something is wrong with the link, said somebody. People are worried.
Huh, that's very weird. I don't know. That's the weirdest thing I've seen on. That's weird.
Maybe YouTube is having issues today.
Yeah.
Google maybe is worried about the markets. I mean, they opened an hour ago. Maybe you should check that out. Maybe they're down.
I show 443.
Oh, okay. So maybe it's my end. I refreshed the page too.
Yeah, mine just hit up to 567, but it did say 78. So I think we have a YouTube issue.
Oh, okay. There it is. Wow. Okay, makes sense. Makes sense. All right, there we go. It was just weird. It was just weird. All right. A minor detour there. Let's get back.
Looks like it just dropped again below the green line.
Yeah, so if that's a shooting star candle, then Tyler, you might be right. Then this thing could be done already. I still think we have a little more life left. It also, I think it'll depend a little bit on the markets. So let's see what's going to happen with the stock market. When are they announcing? 2 p.m., right?
Yeah, it's usually like 2:15, but they're scheduled at 2 o'clock.
All right, cool. I won't be around. I'm actually going to be on. I'm going to be on public transportation when that whole thing goes down, which is kind of bad because I have some positions, which I have open right there, but I'm not going to open them to you guys because there's not a good idea. I don't want to dox my account number of my funds and real funds. So yeah, so the daily chart. I mean, unless this candle is a reversal candle as a shooting star, I will remain bullish. If we can close above this green line, I'll stay bullish. I mean, in fact, this green line should have really been a little bit lower. It really should have been the 3 going above the 2, but the time I drew the line, I didn't know where the 2 was going to end. So above 3,700, I'm pretty much bullish. But if this closes a shooting star candle, then I'd be a little nervous going into tomorrow. All right, there's really no reason to talk about lower time frames other than the 4 hour is going to get you to a 9 soon. That could be a nice short-term top around 4,100 for candle correction, and then back to the upside. Here's another green line that I drew the other day. Looks like we broke right through it and went up. So those of you that paid attention to my videos, this green line was useful. And we're on a 5 of 9 going to the upside. This is, oh wait, that was the 4-hour chart. Sorry, the prior one was the 12-hour chart. Here's the 1-hour chart. The 1-hour chart isn't showing us anything. It's totally neutral right now because of the big drop in the last 2 hours. Longs are taking their profit. Leverage longs have dropped like a stone. That creates a decent scenario for us to go up further, by the way. The ratio, once again, lots of shorts out there, and they might get squeezed any minute. All right, here's GBTC. Here's my insane frustration with GBTC, okay? Because yesterday, at around this time on our show, on our 11 a.m. show Eastern, I said, why the hell is GBTC down so much? The Bitcoin is up and GBTC was crashing. And I said, holy shit, I need to go right after the show and buy a bunch of GBTC. Well, after the show, I decided to go take a shower and then cook food because that was the first time I got to eat. And I wake up around 7 a.m. And the first time I get to eat is after our morning show. So I'm going to, I don't think you guys can see my trading account. At least I hope you can. So I'm just going to do a screenshot. I'm going to do a screenshot. Oh, 1 second. Of the actual low that took place on GBTC. Hold on. Oh, oops, wrong button. I should have done this beforehand. Alt print screen. Now I go here. Come on, why is my computer so slow? I only have 300 tabs open today, not 1,000. Jeez.
Tyler, you want to take a question while Tone gets up?
Sure.
Have you ever seen a market where hyperwaves did not apply for whatever reason besides the funky hyperwave theory?
Say that again. Did I see a hyperwave that did what?
Did not apply for some reason, broke the rules besides the funky hyperwaves.
No, the two big rules that have never been violated is number one, you return all the way back to phase one, which is $1,000. And number two, after breaking phase four, the phase six goes higher. Neither of those have ever been done. That doesn't mean there won't come one that will do it. But in 100 years and 350 plus cases, neither of those rules have been violated. Other than a small number of time that we get these things called funky hyperwaves, which means that all the other rules have worked, but either the phase two or the phase three holds the price up. And both of those have been broken in this downturn in Bitcoin.
Thanks, Ty. All right, looks like you got it, Tone.
All right, so here's what I mean. So yesterday we did our show. So these are 5-minute candles. So we finished our show around noon. Like, actually, we finished the show around 12:15. So we finished our show. Oh, I don't have yesterday's GBTC. Damn. So when we finished our show, this is just, I'm sorry, this was only yesterday's. I don't have the day before. Sure, did a better screenshot, but I'm not going to redo it now. So we finished our show. GBTC was right here. It was at around 425. And for some and I said, whoa, it shouldn't even be down. It should be around 450 because it was down like 20, 25 cents for no reason whatsoever because Bitcoin was having a positive day. And then, like I said, instead of me opening my account and putting in a bunch of bids on more GBTC, I ended up taking a shower and cooking food and eating that food. And by the time I opened GBTC back up, it was already past 2 o'clock and I had to get back to a million messages like I always do. And we were already over here back. And then I saw these candles. So that means that GBTC fell all the way down to below $4. You can see how low GBTC fell. It fell all the way down to 391. So that means that yesterday, while the price of Bitcoin, all the price of Bitcoin did was rise, GBTC from the day before fell the equivalent of $800.
Yeah, that's right.
Like a Bitcoin equivalent of $800 while Bitcoin was rising. Because it fell all the way to the 80 and it was down from like 450. So maybe not, so about 50 plus to about 700, right? So like GBTC was down 700, like the Bitcoin represented by GBTC was down 700 while Bitcoin was up. Like literally, like I almost, once again, this is like the second time this quarter, I wanted to like throw my laptop out the window because this was literally based on the size of the shit that I trade. This was literally like a $20,000 gift that I threw down the toilet because I decided to go take a shower and cook some food. And this is what's really, really frustrating about, you know, doing content and wanting to get back into trading because I can't see myself doing both. I get too like caught up and I get you know, I have to be focused. Like the only way I can profitably trade is if I never do another video again. I delete my Twitter, I delete my Facebook, I delete my YouTube. It's pretty much the only way I'll be able to be a profitable trader again because this was like free money. It was free money in the form of tens of thousands of dollars that they were just giving it to us. And I decided to shower and eat instead. And it's really frustrating.
Tyler,
Bitcoin actually went to a discount. I mean, GBTC went to a discount for a couple of minutes yesterday below the price of Bitcoin because of that move. It got down to about a 2% discount for a very short period of time. That's only about the fourth time in 4.5 years that's happened.
Yeah, and it's insane. And I even said it like 2 hours earlier. I said, holy shit, why is GBTC giving you this gift? And today I believe that it's up pretty nicely.
Yeah, it's up big, really big.
Yep. No, it's not big because I see it by my returns today because I still have a decent position in GBTC because I've been expecting this bounce. So I have a pretty substantial position in GBTC, but I could have doubled or tripled that position easily yesterday because they were giving me tens of thousands of dollars for free.
Yeah.
and speaking of securities, let's look at S&P.
Anyway, my frustrations aside, let's go back to the other screen share. Like, it was literally risk-free money. Like, it's insane. Like, you can see it right there in this spike.
Yeah.
And my formula needs to be adjusted. This was the formula from the day of the 100 to 1 split, 92 to 1 split. So this formula is way different now. This formula technically needs to be adjusted every day. I don't have time for that. We did that whole video where I did a spreadsheet trying to educate people how to calculate the price premium on GBTC. You guys will just have to find it somewhere on my channel.
Tone, what's your current entry point now for the current retracement?
What do you mean?
That was a question from the live chat. What's your entry point for the current retracement for GBTC?
No, I'm already in. I've been in.
Okay.
Like the time to double or triple down was yesterday at 1 o'clock, which was something I said I was gonna do on our show, but I didn't actually open my trading account to do it. So again, Ethereum is up big. That means the bear market's not over. Ethereum is not coming back if you want Bitcoin to come back. Like this shit is not going to go up, both of them again. It's the dream of everyone having their own money is over. Bitcoin has fallen far enough. The only way Bitcoin recovers is if people realize that Bitcoin is important. If people can't realize that Bitcoin is important, then it might as well just like die. Like it doesn't matter, right? Like if Bitcoin is around with all of this garbage, you don't want it. Like it's gonna be bad.
Definitely. S&P, I'm very curious right now with the massive, there we go, crazy. You got the futures.
Yeah, those are the futures. The futures are doing pretty well. And so that means the market is doing well. Let's see.
Yeah, S&P is up 21, which is a little more than 3/4 of a percentage point. The Dow's up 200, which is also up about 0.90%. NASDAQ is up 0.90.
Sounds like you're excited for two.
Well, like, look, we need a substantial close. Like, unless we close above 2,600 this week, I'm gonna be bearish for the months to come. Like
Yeah,
this is if the Fed doesn't save the market today, it's over.
I agree. As our listeners know, I'm 50% in cash, 50% in the stock market, and I've got one more trade to go on Consensio, which is another 50%. The orders are all written, and I could have and probably should have already put those orders in, but I wanted to wait to see what the Fed does. There is a possibility that the last 6 weeks will turn out to be a tremendous bear trap, but it must be sprung today. If it is not sprung today, the technical damage is so severe with all of these taking out the February lows, as you can see on this chart, and the NASDAQ and the Russell doing the same thing, that unless we move up very sharply tomorrow, we're not going to do it this afternoon, regardless of what they say. We're going to get some wild volatility from 2 o'clock to 4 o'clock. But then overnight, watching the futures, if the futures don't really take off to the upside, then I will pull the trigger and be completely out of the stock market. Consensio already has got us completely out, but I'm cheating because I think there's one last possibility. Now, what is the fundamental possibility the Fed could come up with? This is very tricky because if the Fed does not raise today, a lot of analysts believe that is going to scare the heck out of the market because the market will believe they know something, meaning the Fed and the central bank, that we don't, that there is much more weakness than they've been letting on, and that will not be good. If they increase today, which I'm almost sure they will, the voting is about 70% of the market believing they are going to increase. If they do that, and they make it sound like they're going to do another 2 or 3 next year, I think it's all over. I think it drops very big. If they raise and come out and say, however, we've got enough information to tell us we better get our foot off the pedal, and instead of talking about 4 raises or 3 raises or even 2 raises, we'll go by the data, and if we don't need any more raises next year, we won't take it. in that case, I can see that the market would think about it for a little bit and then start rallying very big and then rally through Thursday and Friday this week. And that would be enough for me not to pull the trigger. But other than that, I am more bearish than I've been in 10 years in the stock market. Remember that we have ridden this all the way up for 10 years. And the most we've done is taken 2 breaks in 15 and back in 11, where we raised some cash, 25% max. Earlier this year, on 2 occasions, we raised 15% and 15% and put it back to work. Now we've got 50% ready to go 100%. So for us, meaning for me, using my money management techniques, I always want to get out of a trend that is reversing within the first 10% of the reversal. I don't want to wait for 20% or 30% or 40%. Now, right now, the market is basically flat to down 2% for the year. That's because we were up 10% 6 weeks ago. We've given all that back and we're slightly down. If I pull the trigger now, we will be out well before a 10% drop. And the question is then, is it a bear market? Do we go into a recession? Are we going to drop 20, 30, 40, 50, 60, 70% like we did in the previous 2 drops? Nobody knows. I don't have any technique to tell that. So what I do is I stand aside and I get in cash. This time around, as you heard us say on our last couple of webinars, I'm actually going to go net short for the first time as a money manager. I'm going to buy inverse funds, not just to hedge long positions, but because the implications of us going into a recession at this point could trigger the big event that Bitcoin has been anticipating, that we've all been talking about, which could trigger us going back to a gold standard or defaulting on a tremendous amount of debt around the world. So I don't treat this turnaround from a 10-year bull market into something else the way I have over my career. This one is bigger than all of them, potentially, because it can trigger a tremendous reaction in world macroeconomics.
Thanks, Sai. And Tone, I love that you pulled up crude. Yeah, I mean, Dow's down, what, 12% since October, S&P down 5%, and we have WTI, big news yesterday, and typically WTI is tied to the markets in fun ways. And you and I have been yelling about this, and you actually have contrarian views to Tyler as well. So what are you seeing right now in oil futures?
Well, the chart is very bearish. You hit a 9 and then you dropped hard. So this is bad. If next week gives you a lower price, then crude is probably going all the way down to like probably $20. It will probably go below the last low of $30. Yeah, so Tyler, when I was watching your last live stream, you talked a little bit about, I should probably go to the monthly chart. You talked about the big bubble in gold. Now, I remember I was already on Wall Street during that bubble in gold. The bubble in oil. This bubble in oil, which ironically topped right there on a 9. This bubble in oil took place from, I'm not sure if that was a hyperwave or not. I guess you'll have to answer that one. I don't think so, but it could have been.
It looks like it. I haven't looked at it closely, and this is a monthly. I would do it on the weekly, but on the monthly, you can see the angles in there going up. The last one being the 4, the 3 before it. The 2 looks a little weird, and I need to see where the 1 was. If we call that all a 1 back there in 92, 93, 94, 95, 96. And then we called the two from 1999 to the bottom of 2002, which I don't love. That would be a 2, 3, 4. It could very well have been.
Yeah, the 3 and the 2 might have very similar slopes, but you
Yeah.
might take a look at it on a weekly chart and in
Yeah.
linear, because I am in log.
Yeah, I will take a look at that.
Oh wait, I might be in linear. I was in linear. I was in GM. I was in standard. So this is standard. This is not log. Okay.
Right.
Anyway, so the bubble in oil took place as the economy was crashing, and then the economy crashed with oil. But then, but oil had its own bubble. I remember this. This was actually completely independent. I don't think this had much to do with the economy. This was just a bunch of leveraged traders trying to one-up each other. This was just complete speculation. There was no economics behind it. It was just general. Now, the one thing that, Tyler, that you said in your last video is that you've been a little surprised how the market has been able to recover so much and continue to go up while gold was being depressed, while gold stayed low. And you said you kind of expected, like from a macro perspective, that oil should have been rising with the equity markets. And I kind of disagree with that. I see it the other way around. I think the low prices of oil were a huge boost to the equity markets, because with low oil prices, everything becomes cheaper for companies. You know, airlines can make more money. Oil is cheaper. Moving goods around the country is cheaper. I actually like it when oil stays low, because I think it spurs a lot of economic activity because everything is cheaper for your business.
Yeah, it's a funny thing. Both gold and oil are different than other commodities because other things can affect them. Usually you get all the grains and all the metals. I mean the industrial metals, zinc, tin, lead, things like coal, moving opposite the inflation rate. So when inflation is high, they all go up like they all did in the 1970s until Volcker stopped that. When interest rates and inflation are dropping, that tends to weigh on commodity prices. They tend to move opposite the dollar. When the dollar is strong, commodities in general are weak because they're all designated in dollars. And we've had a strong dollar. But every once in a while, you'll get oil and or gold moving with the dollar, and sometimes moving with everything other than all the other commodities. So what I was thinking that puzzled me about the economic growth in the US is when lumber prices, oil prices, home building prices, and almost all the industrial metals began to fall. Because I was looking for a very bullish outcome of our economy and our stock market. And I kept saying so along with Tone all this year. Every time that we got these 8% drops back in February and again in the late summer, I thought that they were going to hold and we would go back up to new highs, which they did. But then all of a sudden, we got this recent sell-off, and it was preceded by all of those commodity prices dropping sharply. That is very often a signal to weakness in the overall economy. Now, your point, Tone, is very well taken. If oil prices had been low, as opposed to going low while the stock market and the economy were trying to expand, I would agree that that would be helping consumers buy more of it, which would strengthen the economy. But what we're seeing this time around is while the economy and the stock market are struggling to get back up 10% higher where they were 6 weeks ago, you've got oil prices, lumber prices, and all these others dropping like a rock, which signals to me that maybe this time down this year is different than the previous 2 times down. And therefore, I'm ready to throw in the towel on the bullish case. I'm giving it one more shot, which is this afternoon. And we'll see if either Trump or good sense moves back into the Federal Reserve and they stop just going by the book and they realize that this market worldwide, our stock market and our economy are not nearly as strong as they thought it was.
Thanks, Tone. Given you were talking about fundamentals, I want to throw in a question. Yeah. To Tyler's point, housing markets showing strain, right? Higher interest rates definitely haven't helped auto sales in Asia down. Germany saw its GDP contract in the third quarter. We have our trade war, right? I personally would see this, immediate move in the past few days in oil potentially just caught up in broader risk off move that we're seeing in the equity markets and generally risk assets. But what you're talking about, potentially this market for oil, even though we just switched back to S&P futures, is moving more south than fundamentals warrant. So, what are your thoughts on just maybe a more longer outlook for 2019? And given what we've been saying about S&P, you're more bullish than Tyler on S&P, my understanding.
I've been more bullish than Tyler on S&P, I think, this entire year. But I think I'm ready to give up on it. Like, I'm just waiting till tomorrow to actually give up on the S&P. I've been pretty bullish, like you all know. So I'm not really sure of the actual question. My view on oil is this: oil should be down around $10 to $15 because the world has a shit ton of oil, way more than we need, and renewable energy should be ready to take over 80 to 90% of all the stuff that we currently use with oil. Now, the cheaper oil is, the less useful these renewable energies become. So in a way, you want oil to be up around $100, $150. Hell, you kind of want oil to be around $300 a barrel because that would kind of force most of the industries to change from oil to renewable energy. Either way, oil isn't going very far. Like I don't know, Tyler, if you read any of the books by Stephen Lieb, when he was saying 20 years ago, 15 years ago, oil is our biggest, problem. When oil goes to $200 a barrel, we're all gonna die. All of these gloom and doom predictions of oil. Oil can't get to $200 a barrel no matter how much money they print, because when it goes up, people start using renewable energy. When it goes down, people don't need to use renewable energy. At some point, renewable energy is going to win, and then oil will go down and start to become a relic. So I think the correlation between the stock market and oil is starting to decouple. I don't see it because it's hard to judge oil because you have a 3-point monster here: oil, renewable energy, and it's really debatable to me. I can't get myself to call nuclear energy green energy. Whoever came up with that marketing gimmick deserves a Nobel Prize in marketing, because somehow nuclear energy is considered to be green. You agree with that, Tyler?
Well, I do, other than I always thought it was crazy when we started shutting down all our nuclear plants back in the 1960s and 70s. because they were green back then, meaning not that you can't have problems like in Chernobyl or 3 Mile Island and these other things, but because if they are working properly, they give off absolutely zero in terms of emissions. They're cleaner than everything, including solar, because solar takes a lot of energy before it gets to make the panels. And but I hear what you're saying. That
I can debate that. I can actually debate that a little bit. We're not going to do it on this show. Like sure, nuclear energy could release very little as it's being done, but that nuclear energy needs to be stored, and there's a huge cost to storing that energy for the next 20 or 50 years because the half-life on it is pretty damn big. So there's still an after effect of that anyway. Leah, you're gonna get us back on track.
Yeah, I'm going to go nuts. I'm contrarian to you guys. I mean, simply put, oil doesn't generate power. Oil is used to make plastics, which it can't replace that with the renewables. I mean, I guess I have a question to you guys, but I think it will take decades to replace 1 billion internal combustion engines on the road. And you can't force consumers to buy an electric vehicle just because Tesla is a shiny sales pitch. And I think Elon is super crazy despite being a good CEO. I mean, actually being insane, just visionary, I should say. So maybe question, given you guys love talking about gold, is, what are your views on gold being primarily a, financial instrument versus oil being driven more by its supply demand fundamentals? So to what extent is TA applicable to a fundamentally driven commodity?
Well, I'll just answer that very quickly. Every commodity, everything that changes hands is fundamentally driven. However, and therefore, every one of them can be tracked more accurately with technical analysis. So it doesn't matter what the distinction of the thing is that passes between hands. If it's barter or if it's anything else, technical analysis will pick it up in terms of price movement. But your bigger point is, I agree with you completely. I think we are quickly going to renewable energy, but that will stop immediately if we see prices back down at $30 oil or $20 oil. It will simply kill off the future, or at least hold it in abeyance for the entire green energy and renewable energy sector, because they're still much more expensive, even though they've gotten a lot less expensive than they were down at $20 or $30 oil prices. But more importantly than that is the vast majority of people don't want to use them. It's so much easier to use oil and gas for cars and everything else. So I think it's 50 years until we have to worry about that. And because of the US becoming, for the first time, energy independent, we do not need to any longer import oil or LNG or natural gas or derivatives like jet fuel. We can do it all internally. We can be very large net exporters. And because of that, there's no real reason under this administration, and in my opinion, probably the next couple, for us to change and start switching very quickly over. So I find the drop in oil fascinating right here, because it's trying to say from a supply demand point of view that there is plenty of oil and therefore the price is dropping, that the supply is much greater than the demand. And that's why it's dropping. That's the fundamentals of what we're seeing. Now, we can debate that, but to me, the technical is saying prices are going lower and maybe much lower. And that does not happen if the demand is greater than the supply for other than a very short period of time.
I agree with you, Ty. I mean, I agree with you. I do also think it's going to be sticky and maybe holding around 50. But it's just the point that, oil and power and natural gas and coal that power are competing against, I guess, is the main point that I was trying to make. But yeah.
Hey, I got a question. Hey, Tyler. So I haven't had time to pay attention to what the Fed is supposed to say.
Right.
So do you think they're going to raise rates today? And do you think they should raise rates today?
Yes, I think they are going to raise rates today, and I do think that they should. And the reason I think they should, but they should with a very detailed explanation that this is probably the last time they're going to do it. If they do it, meaning raise it, and they don't give a good explanation, then I would prefer that they didn't raise it at all. And they're too smart not to do both of those things. So I think what we're going to see is we're going to see a 1/4 point higher and some statement that lets most analysts conclude that they are going to slow down the pace of what they were going to do next year. And if that occurs, I think that will be bullish for the stock market.
Yeah, I'm with you there. I think they are going to raise it as well. I think they're going to raise it 1/4 point. And I think they should talk about how they have no plans to raise it next year. However, I do hope that they raise it next year like 3 or 4 times because rates are reasonably low. So I want them to talk a good game for next year, but then go and actually do the right thing and raise the damn rates.
Well, and the thing everyone, the listeners have got to understand, all my clients have to understand is we still have a very strong economy. That's the point. And that's the problem the Fed is having because you're running at 3 to 3.5% GDP. You've got the lowest unemployment. You still have very high consumer confidence, very high corporate confidence, and very low interest rates and very low inflation. All of that is textbook that the Fed needs to raise interest rates. So they're in a conundrum that the facts and the evidence do not suggest this should happen. But the stock market is saying something different. And the stock market is very, very smart. It's not quite as smart as the bond market, but it is a very strong leading indicator for things to come. The bond market with an inversion of the yield curve, which it has not done, but we're getting closer and closer to it, is a great leading indicator for recession and therefore a great leading indicator in the stock market dropping. But here we have the stock market dropping with a strong economy, with no inversion in interest rates. And you can see why the Fed has done what they've done up till today. But I am worried that we are right on the verge of this stock market falling uncontrollably, unless I'm right that this is a bear trap that's going to be one for the ages. If we can turn this thing around and start shooting higher, the economy says we can, but the stock market right now today at this moment is saying it's over. We're headed lower.
Tom?
No comment.
All right, we have about 15 minutes. You want to look, actually someone asked you a question about if you want to look at the dollar. It's probably pretty prescient given 2 p.m. as well.
Yeah, the dollar is gonna probably move. Whoa, what happened there? I may actually have to do some trading after the show, unlike what happened yesterday. At least I ate before the show this time. All right, so the dollar. Well, yeah, let me see what's going on.
Dollar's around 97, 96, 98. So it's hanging in there, but it's still halfway between the top and the bottom for the last couple of years.
Oh, we're back to near the highs. So this is the weekly. I gotta wait till Friday. Like, there's not much I can say about the dollar. It looks like it's gonna break out. I mean, you don't consolidate near the top for this long, breaking prior swing high and not go higher. I mean, I'm expecting it to go higher.
Tyler?
Well, it's in, Consensio says it's in a bull market and going up. And I think it's hard to argue with. If you go back about 3 years, you'll see on a weekly basis that it's midway between its top and its bottom. And so you get some resistance at that point, and maybe it struggles for a bit here, but we're not seeing it in the short or the intermediate term.
Yeah, no, I agree. I mean, once you break that 98, it should go all the way up to like 105.
Yeah, I agree. Yeah, that 98 is very important. And you've actually got a pretty nice looking reverse or inverse head and shoulders that has a much higher look. It's a crooked left shoulder and a little crooked right shoulder, but you can connect those two tops, and you've got a nice inverse head and shoulder that is attempting to break right now. And if it does, you've got a target from 90 to 98 to the upside, which would be 106, which would be take out all those highs.
So awesome. Tony, you got a couple tips if you want to take them prior to us finishing off here, unless you have a final comment on the dollar.
No, let's go for it.
Here, I'll read it verbatim. Suppose stock market goes down, how can we protect ourselves? Maybe how to profit, ? And thanks, guys.
I mean, if the stock market's going down, just don't be in the stock market. I mean, there's no, like, you don't have to short, right? Tyler almost never shorts. How do you protect yourself? Don't have any exposure to stocks, and keep an eye on the stocks of the company that you work for. Make sure that's not like a GM that's going to go to zero and you're going to get fired. Or like me at Bear Stearns, try not to hold any stocks of the company you work for. Once those options mature and you can cash them out. I mean, you should never hold a bunch of stock of the optional stock of the company you're working for. You want to diversify that, right? You don't want to lose your job because your company stock went to zero and you were holding a bunch of your company stock. Like, protecting yourself when the market goes down is like, hell, I was in college when the .com bubble happened. I was perfectly protected. I had no money in the stock market, right? I was too young. So just don't be in the stock market. I don't really have any other suggestions. Tyler?
Well, I mentioned earlier that we're looking at the DOGs, which are inverse. They're not leveraged, but they inverse the Dow. We're looking at the SHs, which are inverse the S&P. If we are beginning a bear market, if anyone wants to just pull up the charts, you will see a 10-year bear market on the SHs and the DOGs that just ended, and we're breaking out to the upside. So they are beginning a bull market, which means that you could ride those for 2 or 3 years, possibly, to the upside, even though everyone else is losing money in the stock market. And yeah, go ahead.
Just as a logical segue, actually, wow, I have reboot. Got a tip, and I think it's logical to what you're saying. In what stocks and ETFs would you first buy if the Fed message is a bullish one? So just a continuation of what you're saying.
Well, yeah, if this was a bear trap that has caught a lot of people already and we turn to the upside, I just go by Consensio. I'm 50% in the market already with very broad diversified portfolios. I will add to those as Consensio makes each of its moves, adding another 5%, another 5%, another, and 15% in the last 25% as the moving averages turn to the upside. I'm not going to jump quickly into the long side. I'm already long 50%. So what I will be doing is building, if this really is a continuation of a bull market, back to a 100% position using the rules of Consensio.
Tone, you just pulled up the NASDAQ 100.
Yeah, it looks terrible.
Thoughts? And then also you got a tip on a security.
The transports look really bad. And they look weird because they made a really weird secondary high.
Yeah, absolutely. The transports are horrible. And that's very important. FedEx is horrible, and that's very important because it tends to be a leading indicator for everything, particularly going into the holiday season, but more than that, for the economy, because everything is done now through Amazon and through FedEx. So when FedEx breaks down as badly as it has, you've got to stand up and take notice.
Right. So you got the trade desk, and I appreciate that the last name is O'Rourke, and I believe the BAM is the Bosnia Herzegovina convertible note, which is like 50 cents. So that was a fun tip to come through.
I mean, other than the sequential 13 calling for the exhaustion low from the last 9 that we had, this is neutral. Like I would not, I don't see this as bullish or bearish. I see this as neutral. I would look for other trading opportunities. Tyler?
Yeah, I would agree. The price is now below all 3 of the moving averages, so it's struggling there. And the long term is moving down, which does not look great. But so I would lean to the bearish side. But when you get price action above the long-term moving average, which we've had over the last 2 days, it looks like it's trying to do something until it put in that last doji that makes me feel kind of negative about where it's going in the near term.
Yeah, except my moving averages were set to what I use for the weekly charts. These are the moving averages I normally use on daily stock charts, and we are still above the 200-day moving average.
Right. So I would agree with that in terms of being neutral here.
All right, gentlemen, we are just over an hour. Last thoughts, and should we close this out?
Yeah, I think it's time to close it out. I'm going to disconnect for the second half of the day. I got to get to the city. I got a meeting. So that's it. We're going to shill the conference one more time. Hey, guys, if you want to talk to us live in person, and it looks like there's not going to be that many people, so me and Tyler and Leah are going to be pretty accessible. If only like 150 or 200 people show up at this conference, we're going to be pretty accessible, along with Jimmy Song and many of the others. And yeah, so come and check us out. Here are the tickets: 0.15 Bitcoin, $750. I think it's a reasonable price for a conference that doesn't yet have any sponsors. So we're covering everything. A lot of people asked if there's going to be a live stream. The answer is I don't know. We're trying to get quotes on live streams. They range between $10,000 and $15,000 to run a live stream. So we'll see if we want to spend that kind of money on a conference with a few hundred people in attendance, and if we have the budget. But maybe next year we'll do it a lot better. But you really want to come out if you're free in Vegas. If you're free at the end of November and want to come to Vegas, that's where you really want to be. All right, guys. That's it for me. And we will bring you possibly a show tomorrow. Yeah, so I have about 5 interviews I got to do tomorrow, like video interviews. Most of them are not live. The law review is coming back tomorrow. It's possible we may or may not have morning brief. I'll talk to Leah after, along with Jimmy, and we'll see who we can get for tomorrow, if anything. So we'll keep you posted. Other than that, see you all on the next one. And Tyler, Leah, thank you for joining me. Any comments from you guys, or we can go out?
Yeah, Tone, actually, you got one tip that relates to Tyler, which is that, I'll read it straight. You mentioned a trip to visit Tyler on another show. Would you consider visiting him in Nashville or Nuga before Vegas? Put you on the spot.
Yes.
All
Yeah,
right.
that'd be a lot of fun. We could do a show from beautiful Chattanooga or Nashville. Great. Thanks, everybody. You'll hear from us tomorrow for sure, Leah and me, Leah and I, because of this Fed meeting. It got me very nervous, as you all know.
And we'll talk treasuries. That'd be a fun one too.
Yeah.
All right, everybody, have a good one. Thanks, Tone.
Bye, guys.